Hi, welcome to Trading with TK, teaching you to turn ideas into money. We're at www.tradingwithtk.com, and today's Thursday, June 26th. Now, before we talk about the market, I want to do a question and answer period this weekend. So if you have some questions that you think the trading public would be interested in and that you want answered, send them on in. I'll see if I can answer them this weekend. Okay, what a down day we had today. 358 points in the Dow, well over 2%. Just about all the indexes were down over 2% today. It's Mr. Bernanke's fault. He's talking higher interest rates, and the market did crack the day after the Fed meeting. But we knew the market was going down anyway. We didn't know it was going to be 358 points today, but we knew they were going down, and he's just helping it along. So now we have all new resistance areas. All our resistance areas have been lowered. So stay tuned for the final segment when we go over all the indexes and I point out all the new resistance areas. I've got a new idea for you tomorrow. Another short. The stock is COGT. And then we'll take a look at Red Hat, which I sold today, finally late this morning. Kind of got away from me on the downside. Wasn't the exact price I wanted to short it at, but the pattern is still ugly looking. So we'll take a look at that. So without further ado, let's take a look at COGT. I'll show you how we're going to take this idea and turn it into some money. Now, don't go away. I'll be right back. Okay, we're looking at a daily bar chart of COGT. This is a call on the short side. And we'll be looking to sell it short around 1184. It's just where it closed, right up here. My target on the downside is 840, right down here. The stop loss, which a lot of my readers would like me to suggest a spot for that would be $12.50. That's on a closing basis only. Not if it trades up through there intraday, it doesn't count. So on a closing basis, $12.50. What do I see? Well, first breakdown, kickback. Second breakdown, kickback. And this kickback is what we want to take advantage of, this kickback, so we can get our short off here tomorrow. I also see a descending triangle forming here. And there it is there. And this was the key break right here, and this is just a kickback rally. Okay, so let me recap this. This is COGT. This is a call on the short side, and when all's said and done, I think we can make about $3.40 on this trade. Let's take a look at Red Hat. I sold it short today at $21.43, a little further down than where I wanted to. I wanted to short it right in here, but it cracked early this morning. I didn't chase it down here. I waited for this to rally back up into this little resistance area before I put some out. And hopefully maybe tomorrow or the next day it might even lift back up a little higher in here, and I'm going to put some more out. But the pattern is still a down pattern, and like I said, it just probably yesterday was the day to short it, not today, but we were shorting something else. We were shorting, I think, CMO yesterday. Anyway, that's Red Hat, and the chart still looks promising on the downside. Okay, let's take a look at all our major indexes, because all our resistance areas have been changed except for one. Here's our Dow. So much for the March lows. They went through that pretty quickly. They hung around there for a day or two, and then bang. It wasn't surprising. We were trying to figure out how are they possibly going to hold up those March lows with all the weakness that's happening all around in all the other indexes. Well, the answer, our question got answered today. Had no technical significance whatsoever, that low. Anyway, here's our new resistance area on any kickback. This is where it's probably going to be held at bay. And I do expect a little bit of a kickback. I mean, that's the way the market's been going. It's been going down and then coming back a little bit. Okay, the Dow Transportation Average, another new low in that. This was our resistance, but we now have a lower resistance than that, and it would be right there. So any kickback up into this area here will probably be held at bay. Russell 2000 following the rest of the market down. It's no surprise. It finally caught up. This is our resistance area here, and I'm not going to change this. I don't think this is enough here to stop it on any kickback rally. I think a kickback rally could get it back up into this same resistance area. In order for me to call this a resistance area, I would have to get a breakdown into here somewhere. And I think we're going to get a kickback first. Okay, that's the Russell. Now the SPY, which represents the Standard & Poor's 500. It's approaching the March lows, but you know what? We're not going to give these March lows any kind of technical significance whatsoever after we saw what happened in the Dow. And our old resistance was here, and now our new resistance is here. So any kickback up into this area probably will hold it at bay. QQQQs, the top 100 NASDAQ stocks. This had been our resistance area right here. As you can see on this little kickback rally here, it got right to it. And today, well, I did call it a fragile market, but any little piece of bad news, and boy, the sellers come out of the woodwork. Anyway, we're down pretty good here, but we do have a lower resistance area. So we've got to take that resistance area down to right here. So any kickback rally, which I do expect to get, within a day or two anyway, I do expect to get a kickback rally, but I don't expect to get much past that red line right there. Okay, so those are all our new resistance areas. The market continues to trace out lower lows and lower highs. It's not over yet. I don't think it's going to be over for a while. I mentioned yesterday, September, October probably might come into play again. Those are our 2 months usually that we get some significant lows. And it's always a scary month, but major lows are usually put in either one of those 2 months. Okay, so until tomorrow, that's my view of the market. This is TK signing off.